Now time for Trading Nation, because traders do trade better together. And today, let's look at high-yielding stocks, maybe like a Pfizer, because they've had a rough couple of months. Chad Morganlander is with Stifel Nicolaus. Craig Johnson is with Piper Jaffray. You know, it's interesting, Chad, maybe you want to focus on Pfizer or something else. I understand that yielding stocks have looked less attractive in the face of a potentially higher federal funds rate if we get one in December, but does it justify the move down that many of them have seen?
Well, it's a case-by-case kind of issue here. Look, investors have been looking at high dividend-paying stocks as a bond-like alternative. As the Federal Reserve raises interest rates, albeit slowly, we're expecting only 2 rate hikes in the next 18 months. That's going to apply pressure to a lot of these companies' performance, like utilities, for example. And it also, on a case-by-case basis, energy stocks. So we would be avoiding those type of companies. What we would be buying are companies that are dividend growers, where top-line revenue growth is robust, where predictability of operating margins and gross margins are substantial. Yes.
Such as?
Such as Pfizer, for example, even though they came down, that is a high dividend-paying stock.
Is that a stock you own? I mean, I'm just putting you on the spot here, Chad, because Melissa
we
just
own
highlighted.
Pfizer.
Would you buy more now because of that 15% drop in 90 days?
Absolutely would, okay, because they have a long-term forecasted growth rate on the top line of 3 to 5%. That's all you need to hit a price target of $40 per share. Another name that you may want to look at is a Church & Dwight, CHD. They're a consistent grower, top-line growth of 5%, dividend growth roughly of 10%. You may want to look at a lot of these healthcare companies that do pay dividends that are consistent growers. I think there's a tremendous seam of opportunity within the healthcare sector as this headline risk has come into the market.
I like it. Church & Dwight, based near my house, and they are best known for baking soda. Very exciting product, but Chad likes it. He's a value guy. All right, Craig Johnson, let's go to this. How do you chart sort of the demise of the higher yielding stocks, and how does it look to you technically?
Well, Brian, one of the things you can do is you can look at some of the proxies like the XLU, the utility index. And this is an index that's already violated the uptrend support line that's been intact for the last, say, 12 or 18 months. And you're now starting to put in a series of lower highs and lower lows, and you're coming back to a pretty important area of support. What we're seeing here with this index is really what I've been hearing since I've been traveling all around the globe talking to clients is the reflation trade is starting. And there's going to be a lot of money that's going to need to come out of these areas, such as healthcare, such as the utility stocks, and it's going to rotate into other areas, such as financials. And whether it's a Citigroup or a Bank of America or a Goldman Sachs, they all look like very attractive charts that are starting to turn higher. And I think you're going to continue to see that trend continue as we see the Fed raise rates going forward in the future.
Pro financials?
Correct.
Craig?
Yes,
Chad?
we're officially neutral.
Go ahead. Finish your thought, my buddy.
We're officially neutral on the financials, but they are definitely starting to improve, and it is one of the stronger areas out there from our perspective.
You're closely watching it, as perhaps they say.
Correct.
And by they, I mean me just now. Craig and Chad, thank you both very much.
Thank you.
For more Trading Nation, you can closely watch it. A couple more segments every day. Go to tradingnation.cnbc.com.
Different sectors of the market tend to do well during different periods of the economic cycle. When the economy is expanding, industrial and technology stocks have historically outperformed the broader market. When the economy is contracting, more defensive sectors such as utilities and consumer staples tend to outperform. So when choosing to invest in a particular sector, be sure to consider where we are in the economic cycle.
Hey CNBC fans, thanks for checking out our YouTube channel. Here you're going to find videos packed with all of the information that you need to be smarter about your finances. You can subscribe by clicking right here and click on all the videos around me or the I right here to watch the latest from CNBC. Thanks for watching.